With the euro crisis still hanging in the balance, there has been a stronger rally towards commodities such as gold, leaving currencies to take a back seat. Joining me to discuss this further is Jay Molina from Vertical Forex. Hello, Jay. Due to the current volatility caused by the euro crisis, there has been a rally towards commodities such as gold, which is predicted to hit $2,000 an ounce by Christmas. What are your projections?
In the past few months, gold has been moving in a trading range that suggests that it could be getting ready for another big move. Now the question is, will the move be up or down? There are several factors that could influence gold prices to go down or to at least to not reach the 2000 level in 2012. Things like monetary law implementations by the central banks and governments across Europe and the US could potentially drive investors out of the security of metals into other volatile investments. I also believe that, on the other hand, most of the efforts from governments and central banks have been ineffective during most of 2012, and investors might continue to look for a more safe investment, such as gold, to protect themselves against market volatility. Therefore, the US dollar could potentially continue to lose value, what causes for metals to go up in price. And I actually believe there's a high probability for gold to reach new highs by year end and potentially reach the $1,900 to the $2,000 level.
And how do you think a long rally towards precious metals will affect currencies? Do you think we can see commodities as a safe haven compared to currencies, especially in the current climate?
It really depends on the currency pair. You know, currencies obviously reflect their country of procedence, and each country will react differently to the loss of demand and supply that govern gold prices. And let's say we talk about the US dollar, we can expect for the dollar to drop in value as gold continues to reach higher highs. This will then affect all the US dollar crosses in the forex market. And you know, this could potentially lead to a large trend in the euro USD as precious metals raise in value and more investors look for safety in gold and silver. I believe commodities such as gold can be seen as a safe option for investors to protect themselves against the current market volatility. However, currency trading and forex investment funds still can provide investors with a substantial level of protection while still delivering realistic positive returns.
What advice can you give to traders at this time? Where is their money safest right now?
As the volatility in currencies continues to go in the rise due to the European crisis, traders and investors alike should make use of effective money management and risk control. Without money management, the reality is that trading is just gambling. On top of that, I believe that in not putting all of your eggs in the same basket, proper diversification is definitely a great way to reduce the negative effects that market volatility can have in your investment portfolio. In times of financial uncertainty and high volatility, I strongly believe that having a multi-asset portfolio that includes forex investments, traditional assets, and even gold can help anyone to hedge against the challenges that an economic crisis presents.
Thanks for joining me, Jay. Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now, though, goodbye.